Hello friends, it's a pleasure to meet you again. This time we are going to talk on whether it is beneficial to take a property on rent or to own a house. Now, there could be various emotional decisions, like when you were like kid, you always wanted to own your house. You would have seen your parents getting a property almost at the verge of their retirement, or it's just a matter of prestige, when you own your house. When you don't have funds to own your house, you will take obviously a loan. No, there is a saying, it says, no, if you take a loan, you will definitely start loving your job. Why? Because you need money to repay that loan. Or if you stay in a rented premises, you need to vacate too often. There could be a tiff with the landlord. All these things are some of non-financial consideration that has to be taken. Just because, let's say, you would have heard some of your school friends, buying a brand new villa. Now, because your friend has got, it's a matter of prestige for you, you would like to buy. All those things are non-financial consideration that has to be given weightage, no doubt. But now we are going to talk about only financial consideration. How financially it is better to go for a rented premises rather than own accommodation. Of course, if you have already got an own accommodation, my personal advice would be not to invest in your immovable property. Invest maybe in government bonds, mutual funds, or some kind of shares and stock if you are, okay in taking some kind of risk. I've already done a video on various types of investment. In case you are interested, you can try going and seeing that video. Now coming back to this discussion, our area of concentration would be only on a financial part. How financially it is viable or not. This is an Excel that I have picked from Google. So we can key in, everything else would be generated, formula oriented. So whatever it's in green, that alone we have to key in. Cost of the house. Assuming I'm going to go for a medium type of house, let's say it's going to cost us 60 lakhs. The cost of the house is going to be 60 lakhs. And we have to go for a down payment. The banker cannot give the entire loan. We have to go for a down payment. Assuming the down payment we are going to make is 15%, which is 9 lakhs. Rate of interest today, because the repo rate has increased, that is as on August 2022, the repo rate has increased. The housing loan rate has also increased. It is somewhere around 7.5% that we have got. It is 7.5% is the rate of interest that we have got. We have got. Uh, 7.5% is the rate of interest. Amortization period. For how many years are you going to repay? Let's say we are going to take for 20 years. We are going to repay it for 20 years. When you are buying the house, you will be liable to pay property tax. That is an additional thing that you would be paying. Let's say the property tax that you have got is 0.25% of your house. 0.25% of your house, which comes to 15,000 rupees. Which comes to 15,000 rupees, or we'll say rate. We will give it as only rate 0.25%. We will retain it as rate. Annual maintenance, because you have purchased the house, you have to maintain the house. Like you have to do for painting, you have to give for some kind of maintenance cost. If you are in association, you have to pay some maintenance cost. Let's say the maintenance cost comes to 0.5%, which is 30,000 rupees. You have to pay 30,000 rupees for this. Now, at a later point in time, you would be selling the house. What is the annual appreciation rate? Annual appreciation rate, let's take it as 4%. The property value just increases by 4%. Now, next that we have to do is, in what tax rate we are in, assuming you are earning more than 10 lakh rupees, we will take 30% tax rate. 30% tax rate. What are different types of slabs that we have got? I've already done a video. You might be interested to see. You can go and see that if you are interested. Then inflation rate. In India, the inflation rate is like 7%. So we will take it as 7%. So this is a formula calculated. We will not get into. We have already discussed about this formula. It is 41,085 is what we have to pay. Assuming you are making a more down payment, this will get reduced. Let's say you are going to pay 12 lakhs. So your down payment will reduce, obviously. Obviously, it will reduce to, if at all you are paying 20%, your mortgage will get reduced. We will retain it as only 15% as down payment. Now, if at all I have to take this property on rent, let's say it's a 2 BHK property, I have to take this property on rent. So I have to at least pay in an area in Chennai, if at all you are going to take a property 2 BHK on rent, you cannot get a 2 BHK without 12,000 rupees. 12,000 rupees is the bare minimum that we have got. And every year you cannot keep it at 12%. It has to increase. The rate of rent will increase. Let's say it is increasing by 5% every year. It's increasing by 5%. Now, what is the, if at all you are not invested, for example, my monthly EMI would be 41,085. My rental payment I will be paying is only 12,000. So you are saving around 29,000 rupees if at all you are opting for rental. So the 29,000 you could invest somewhere. Let's say you are investing in fixed deposit. You will earn only bare minimum of 5-6%. So we will say you are investing in mutual funds or bonds. So you get around 8%. We will take it as 8, 9 or maybe 10% for ease of calculation. We will have it as 10%. So these are the numbers that we have got. Using this number, let's go ahead and see how much it is beneficial for us to take a property on rent. What is the beneficial thing that we have got for taking the property on rent? Because the property has been taken on rent for 20 years, you will have totally 240 months for our discussion. So when you have purchased the property, the home value is 60 lakhs. 51 lakh is your debt component because 9 lakh is your component. 9 lakh is your component. And it keeps on growing. It keeps on growing because you have given an inflation rate and annual appreciation rate. The value of the property will keep on increasing at the rate of 4%. Every month it increases by 4%. Therefore, at the end of the 240th month, you will have 1,33 lakhs as the value of the property. Value of the property. Debt will not be there because you would have already repaid the entire amount. You will have only equity. You will have only equity. Entire property will belong to you. Debt na, it's a loan amount. We can call it as loan. You can call it as loan and you can call it as loan amount. For better thing, you can call it as loan. That means you have taken it on loan and all these are formula driven. Whatever is there in green, that alone you have to key in. In case you want to check, I will share this in the description box. You can go and check this sheet. And in case you want to take up, in case you want to change the factor and then check, that also is possible. That option is available to you. Now, 41,000 is the EMI that you have got. That EMI is bifurcated into debt and principal component. We all know how it is. We have already done a video about how in the initial stage, a major chunk will go only to the interest part and a few part alone will go to the principal. Now, maintenance cost. Maintenance cost is additional thing that you have to pay, which will be at the rate of 30,000 per annum. So it will be 2,500 per month. And this keeps on increasing at the rate of general inflation. Maintenance will also keep increasing at the rate of general inflation. Then you have got property tax. Property tax per month I have split. Per month I have split. This also keeps increasing. This also will keep increasing. So per month we have got. Now the next point is what is the income tax saving on interest? If at all you have paid interest, you would be eligible for the income tax saving. How much will be the income tax saving? 30% slab you are in. So on the 31,000 rupees interest, you would be saving this amount of income tax, because once you pay interest, you can claim it as deduction. Again, I have done another video on this. You can go and check what are the various deductions that are available for tax for salaried person. You can go and check them. So this is the total cash outflow. These are the various outflows that you. So in case you buy, what would be the total cash outflow? So the total cash outflow would be your EMI that you are paying 41,000 rupees and all, plus your maintenance that you are going to pay, plus your property tax. These are the three things that you will pay, minus tax reduction. Because you are paying interest, your tax will get reduced. So it will be 41,000 plus 2,500 plus 1,050 minus 9,938. So we will have this much of cash outflow, and the cash outflow is given for all the 240 months. All the 240 months, the cash outflow is available. This is in case of purchase. Now, in case you are going to rent, you are going to rent. So we have cash outflow that could be spent. What is the rent that you have got? 12,000 is what we have taken. You can change it. In case you want, you can change it and do a combination, and then do a combination. So 12,000 rupees, it keeps increasing. It just keeps increasing. Rent, it's not constant. It's going to increase. You start 12,000 in year 1, and you are going to end up paying rent of 32,000 in year 20. Now, so that means how much is your saving? Initially, the down payment you have got, which you will not be making. The down payment that we had, 9 lakh rupees, which you have bought, that you will not be making if at all you have got a rented property. You will not be making that. That is the saving. You can put it in some fund or some mutual fund and get it. Plus, what is the amount of saving in the first month? It would be 34,000 minus 12,050. This is the saving. 34,000 minus 12,050. So in the first month, you are going to save 22,848 plus 9 lakh that you have already saved. Please understand, friends. You will not have only 9,22,848. This keeps growing, because you would have not kept it in your bank as idle fund. You would have invested somewhere. So that is what this 10% investment. That is what this 10% investment. 9 lakhs will go at the 10% investment, which will therefore give you a benefit of 9,30,348. In year 1, you will get in first month, you will get a benefit of 9,30,348. And if at all you have to compute the entire benefit, you will end up having 2 crore 30 lakhs as the benefit. If this has to go only at 10%, if it has to grow only at 10%. So you will have a benefit of 2 crore 30 lakhs at the end of year 20. At the end of year 20, if you adopt for renting the property, not for purchasing. So 2-3 things that we have assumed. These are all the assumptions. So what is the assumption? The house value is 60 lakhs. You can just change it for 50 lakhs. All these things will automatically undergo a change. All these things that you have got will automatically undergo a change. There is no requirement that you have to change any of these values. So if it is only 50 lakhs, you will end up saving 1 crore 70 lakhs as the total amount. You end up saving 1 crore 70 lakhs. Let's say rent you are getting for 13,000 rupees. The rent increases, the savings will get reduced. So we'll again go back to our discussion. Assuming I want to find out at the end of the 10th year. What is the value of the house at the end of the 10th year? That is 120 months. By the 120 months, the home value would be 89 lakh, because the value of the property just grows at the rate of 4%. At the rate of 4%, it keeps on growing. If you say no, the real estate is not growing at 4%, it's growing at 5%, 10%, of some of your real estate broker say it is growing at 20%. Obviously, it is not 20. Somewhere between 4 to 5%, that is what the growth rate is. In case you feel it is at the rate of at a higher rate, you can change that and then check your working accordingly. Now, debt component on that day, right? That is on 120 days, on 120th month. That is at the end of the 10th year would be 34 lakhs. You could say, no, I have borrowed 51 lakhs. After 10 years, whether my loan amount is still 34 lakhs? Yes, obviously, yes. We have discussed, no, initially it will go only to interest payment. It will not go to principal payment. Separate video is available. You can just check that video. You can just check that video, how it will be. Right up. Now, therefore, your loan component will be this much and your equity component will be this. That is 54 lakh rupees will be your equity component. Now, what is that? You are going to sell this house at the end of period. At the end of this period, you are going to sell this house. So you are going to pay some kind of brokerage. I have assumed it as 6%. You can change it whatever number. You can change it whatever number you want. The value is 89 lakh is what you will be able to sell. Now you can change it to whatever number. 6% I have assumed. In case you want to assume it as 2%, you can assume it as 2%. No problem. No problem. 2% is what you can. That means 54 lakhs is your value that you have got. You might be selling the house at 89 lakh 44,000. You have to repay that loan amount. So after repayment of loan amount, the available cash that you will have will be 53 lakhs. Please understand, when you sell your house property, you will be liable for capital gains. I am assuming there is no capital gains. Still you will have like this, sir. Now, what would be the saving if I go for renting at the end of the 10th year? At the end of the 10th year, my saving would be 69 lakh rupees. I would have saved 69 lakh rupees. Now, how much I have? If I have sold the house, I would have got only 53 lakh. If I have not, purchased the house, if I have gone for renting, I would have saved 69 lakh rupees. Straight away, if you see the difference that I have got, I get a saving now. If I sell the house in the 10th, in between also, I get a saving of 16 lakhs. 16 lakhs I will be getting after 10 years. Today, that value would be 8 lakh 42. That is the present value of 16 lakhs will be 8 lakh. Forget about this 8 lakhs. Now, the point that I am trying to tell is, whichever year, we are taken 20 years as cash. After 20 years, what happens? Before 20 years, what happens? Any which way you do a computation, my understanding will be, it is always better that you go for a renting of house. Or if at all you have already got some of one house for your non-financial consideration, like we were discussing, emotional reasons or matter of prestige, or I want to stay in one house, I don't want to keep vacating, I don't want to have this kind of tenant landlord problem, all those things, fine. But more than one house investment, according to me, will not be. Anyway, that is not an investment advice. You can definitely consider your own due diligence and then go ahead. Now, if you carefully understand, my rent would be 12,000. That is what we have assumed. If you see this, my rent that I have got is 12,000 rupees and my EMI is 41,000. 3.5 times higher. What is higher? The EMI that I am going to pay is 3.5 times higher. You could very well say, no, why should I pay rent to someone? I know I am only incurring an expenditure. It is not going to give some benefit. Yes, I am definitely with you. It is not going to give some benefit. But comparing to purchase of property, there is definitely benefit that will be available to you. I hope you have enjoyed this video. Please ensure, in case you have got any doubts, leave a comment. This Excel will be available in the description box. You can download the Excel and then change the value to check for your numbers. In case you like the video, please share the video and also subscribe to the channel. See you soon for some other interesting topic. Thank you.